Volkswagen, one of the world's largest automotive companies by unit sales, has decided to sink $86 billion into the electrification of its vehicle fleet. Tesla has been making great strides in increasing the performance and range of its vehicles and is boosting production output at a rapid pace, which may be making Volkswagen a little worried. In September, Tesla CEO Elon Musk met with Volkswagen CEO Herbert Diess and even test drove the ID.3 vehicle. While it seems that these two CEOs are friendly with each other, they are in fact highly competitive. So let's have a look at the breakdown of this $86 billion investment that Volkswagen is spending on electric vehicles. But before we begin, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data for every single company going back 9 years, and it's all freely available. While Volkswagen is late to the electric car party compared to Tesla, the company certainly got a head start thanks to the Dieselgate scandal. The company's punishment was to spend $2 billion to create Electrify America, giving it a leg up against competitors by having its own electric charging network, albeit just a fraction the size of Tesla's 20,000 plus charging stalls worldwide. Nevertheless, Volkswagen appears to be one of the few established automakers that is actually bringing electric vehicles to market across all of its brands, from the e-Golf under the Volkswagen brand to the Audi e-tron to the high-priced Porsche Taycan. While there have been some shakeups at VW, with Herbert Diess being replaced by Ralph Brandstatter as Volkswagen brand CEO, Diess still remains the CEO of the overall Volkswagen Group. He recently said in a press release that having set the course for a battery electric future in the Volkswagen Group early on, we are now a global leader with our electric platforms and a broad range of electric vehicles. Last year in 2019, Volkswagen sold 140,000 plug-in vehicles, with approximately half of those, about 70,000, being fully electric cars. In 2018, the group said that by 2020, they will have EVs that are as good as Tesla's but for half the price. Unfortunately, this is not the case. It appears that bringing an electric vehicle to market, which many automakers thought would be easy and that Tesla would pave a path for them, in fact is much more difficult than originally thought, not only for sourcing batteries for these cars, but also trying to match the performance and range of Tesla's vehicles. Sam Corris, an analyst at the investment firm ARK Invest, posted this chart showing how competitors stack up against Tesla's Model 3 sedan when it comes to EPA range and acceleration. The Model 3 is seen as the green dot, which is a leapfrog product in terms of optimizing for both range and performance thanks to Tesla's engineering prowess. The other competitors appear to experience heavy trade-offs between these two indicators, having to sacrifice one for the other. Volkswagen uses its different brands to hit various locations on this graph. For example, their Porsche Taycan Turbo S, which starts at $185,000, has crazy performance but suffers heavily from a lack of range at around 200 miles. Keep in mind that the long-range all-wheel drive version of Tesla's Model 3 sells for under $47,000 and now has 353 miles of range. At the other end of the spectrum, not shown on this graph, we would find the VW e-Golf. However, the specifications are slightly embarrassing at just 123 miles of range, but VW is trying to target different price points by making this vehicle start at under $40,000, where it faces tough competition against the standard Plus Model 3. While it may look as though Volkswagen isn't too far behind Tesla in terms of performance and range and price, Tesla is already onto its next venture with plans to mass produce its own 4680 battery and make vehicle structure improvements, which would allow for another leapfrog boost in range and performance. Tesla isn't waiting for anyone to catch up and wants to not only widen the gap, but boost production to bring its vehicles to the masses. Tesla's Giga Berlin factory is still under construction and is expected to start producing vehicles in 2021 right on Volkswagen's home turf. VW currently sells on the order of 10 million gas-powered vehicles per year and stands to lose big time from the shift to electric vehicles. While Tesla is targeting just 500,000 vehicles globally this year, it has increased its capacity to 840,000 just from its US and China facilities. When its Berlin factory and Texas factory come online, this should boost capacity to well over 1 million vehicles. Each of Tesla's vehicle sales take away from a potential ICE vehicle sale, which is rapidly shrinking VW's legacy business. This is why Volkswagen has decided to invest 73 billion euros or $86 billion over 5 years into electrifying its fleet. To put this into perspective, for this amount of money, Volkswagen could have purchased Tesla multiple times over just over a year ago when it was trading close to $40 billion. It's highly unlikely that Tesla would have agreed to any such offer, however. This said, Volkswagen is only deploying about 48% of this cash into battery electric vehicles themselves. About $13 billion or 15% of their investment will still be going towards hybrid vehicles, as Volkswagen still sees a future for these types of vehicles and is hesitant to lose this market. Additionally, 37% or $31 billion is being spent on software. As Clean Technica points out, about 90% of Volkswagen software is currently outsourced, and it intends to bring about 60% of it in-house by 2025. This is a lofty goal, and Volkswagen will be up against Tesla over this time period, which currently writes all of their software in-house. VW's announcement states that they will be investing in the mission-critical fields of artificial intelligence, autonomous driving, and the digitization of significant business processes. On the most recent Tesla conference call, Elon Musk criticized the auto industry, saying they do catalog engineering, or just choosing parts from a catalog as opposed to designing and manufacturing and writing the software for these components themselves. In a world where vertical integration can enable better control over customer experiences and features, Volkswagen certainly has an uphill climb ahead of itself. In terms of their battery electric strategy, Volkswagen is also planning to invest $1.2 billion with its Swedish joint venture Northvolt to build a battery cell production facility that will begin operations in 2024. VW is also retooling its factory in Emden, Germany to produce electric cars, yet they are still shifting their combustion engine Passat and Skoda Superb to Slovakia, where Volkswagen's cash cow ICE business will continue. Herbert Diess admitted that the company would miss its CO2 compliance target this year, but aims to meet its compliance goals in 2021. At the same time, Herbert Diess is looking to legally separate its Lamborghini and Ducati brands away from the company, as Diess doesn't feel as though these high-cylinder performance engine-type brands will play much of a role in an electric and connected world. Herbert Diess acknowledges that this is going to be a race with Tesla. VW wants to retain its global lead in automotive market share. However, they state that they have more body styles and an established dealership network as advantages compared to Tesla. However, both of these items may in fact end up being crutches for the company. Volkswagen intends to produce 70 different electric models by 2030. It's somewhat synonymous with the countless number of phone models that attempted to compete with the iPhone. While variety is good for consumers, it tends to add additional overhead, making it much more difficult to manage as compared to a competitor such as Tesla, which will likely continue to sell just a single vehicle in each major category. Secondly, when it comes to dealerships, they get a bad rap for their high service costs and contentious sales processes. Volkswagen does currently have the edge when it comes to number of service centers. However, Tesla's online ordering model reduces the need for salespeople in physical locations. Dealerships are a form of middleman business, and so Tesla makes relationships directly to the consumer, which gives them more control over the customer experience and allows them to operate faster. Nevertheless, Volkswagen is taking positive steps in the right direction. Without making these large investments today, they get further and further behind Tesla, and so this increases the probability that Volkswagen will still be a major player in the years to come and try to maintain its 10 million vehicle per year run rate. Elon Musk welcomes a challenge, and he has been known in the past to encourage automakers to invest more heavily in EVs. Meanwhile, Tesla isn't sitting still and is targeting to double Volkswagen's current sales numbers and to deliver 20 million vehicles per year by 2030. I hope you enjoyed this video. Be sure to check out our new Salesforce video on the Market is Open channel. I'll put a link in the description below. Don't forget to hit the like button on this video. We'd super appreciate that. And please subscribe and hit the bell button to be notified of upcoming Tesla content. You can support us further on Patreon at patreon.com/themarketisopen. And a very special thanks to Bradford Ferguson of Halter Ferguson Financial and all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.